If you keep taking losses when trading, understand this, you're probably trading in the wrong phase of the cycle. Let me show you. Every one of these dots means something, and I'm going to explain it to you. Before I do that, follow me so you don't lose me. People are trying to impersonate me. So understand this, from here to here is the market showing you the range, right? After we've shown you the range, this is now the dealing range. The dealing range now has a discounted area and a premium area, right? However, this is the extreme that I speak about that you want to trade off. So we come back down to mitigate the causational zone which created a dealing range. At the point of mitigation, this is where us, retail, banks, whatever you want to call it, we get in because the market has shown us the move. People can also get in here, but anyway, we get in here, right? Because we've seen a main push, fair value gaps, or order blocks. You want to get in here, right? You get in here, fairs. The market now goes and replicates this leg into this zone here, either the efficiency of the pullback, being the last supply before the pullback, a bearish decisional, or an extreme, right? So when we do that, the cycle is done. Why? Because the market has shown us the dealing range, we have mitigated, and we have replicated the dealing range. People who saw the move have made profit. So now when they make profit, they're selling at the highs. And when they sell at the highs and we meet one of these points here are a point where a new cycle could start to the downside. When you understand this, it will save you from a lot of losses. A different scenario would be, we go and do the main push like this and we go straight into one of these, right? When we do that, that is an invalidated main push. So when the market comes back down, remember, this is retail getting in, hence why we get this move up. But the banks are really just mitigating these people here. The cycle previously, which will be a bearish cycle in a sense. So we've mitigated a bearish cycle, done this blueprint on the bearish cycle, and then now we're coming back down. But because this was a main push and retail see it as a main push, they will look to get in on the causational zones of it. But the move is flawed anyway. And then now they get in on the causational zone. Because it's a causational zone, obviously it moves up, but it doesn't break the high. Why? Because the sellers here have been mitigated. So when price comes back, they basically, again, topping up on their sales, and then they target this trend line. The reason why I say the cycle is done, and it's easy to even spot when the cycle is done, is when you see trend line, this becomes liquidity. The reason why it's trend line, because this was the main move, this is where retail, us, we got in. Remember, we're liquidity. Anyone that gets in after the main push, you are essentially part of the market. So you got liquidity, you have a stop loss which will be down here, right? Because you're getting in here. Either some people getting bang on 50% fair value gap, some people getting on an order block, but their stop loss will be here. That is liquidity. So now think of it this way: you come on the market, maybe this is on a 4 hour, right? On an M15, you've seen this main push. You have now marked out your demand zones. I'm not saying this is 100% going to fail, but think about the logic